Good morning, everybody. Happy Tuesday. Hope everyone's doing well. Just quickly making sure that you guys can hear me well. Yeah, it looks like we're good on audio and visual. So I would say let's get started. Good morning, everyone. It's Serge Berger here from thesteadytrader.com. It's Tuesday. It's the 21st of October, last time I checked. And this is our Set the Market morning call. We are going to spend the next 10-15 minutes or so going through some of the top things on my notepad. And we are going to start a little bit with the calendar. Now, obviously, this week we have lots of earnings reports. We have a lot of tech earnings reports as well. And then the really big point on the calendar is essentially next week. So towards the end of next week, towards the end of October, basically, just in time for Halloween, the calendar is going to get very, very, very busy with, again, not only earnings reports, but economic data, assuming the market opens, not the market, the government opens again, the U.S. government opens again. So those are the kind of things that we're kind of focusing on out in the calendar. Let me actually quickly check one thing here. Yeah, okay. All right, so what are we going to talk about today? I want to start off just with the Dow, which I think for perspective helps to kind of see how this thing acted. We continue to see a broadening of the market. And, right now, there's a lot of sort of two ways of looking at this. When I look at the market and I look at just charts and, away from fundamentals, there is reason to believe that we have another leg higher. We take in seasonality. My biggest concern right now is that we're very late in the cycle, and things can happen late in the cycle. That's number one. Number two, another concern I have, again, to balance out the bullish charts, is really the sentiment. I'm going to continue talking about this. I have never seen, over the course of my 26 career, as many people all agreeing that we're going to have a year-end rally. They believe it, and I'm telling you 100% of the time, they believe it because that's what's happened in the past. And yes, seasonality-wise, that makes sense. It makes sense from a fund manager's perspective as well, right? From a portfolio manager's perspective, I get it. You want to chase performance. What I'm concerned about is that, yes, we might get a rally. The question is from what level, right? A lot of people are assuming we're going to get a rally from these levels, which would mean, up. But is it impossible to think that we get a rally from lower levels, right? No, I think that's entirely possible, right? Now, what are we going to do? Well, first of all, in terms of making major market calls, I want to get some confirmation. But I want to just give you some charts at least to kind of give you the bull case outside of what I just mentioned, which are some of the concerns that I have. I have concerns that we will get some news that the market doesn't like. We'll get an indigestion phase, and then maybe from there we rally. But again, we'll see. This is the Dow Jones Industrial Average through the lens of the DIA ETF. You can see we basically bumped into a high in December of last year. We revisited that high in February, and again in the summer of this year, and then we finally were able to break above it about a month and a half ago. We've since basically consolidated and sort of moved back to that what used to be resistance. Maybe it's now support, and now we're looking to move higher. Again, technically this is very sound. I don't want to disrespect it. My concern is that everyone is convinced that from here on, the end of the year rally starts, right? And it may well. I don't think a lot of people are taking into consideration a scenario where we see a breakdown first and then rally from a lower level, which would also bring the rally to a much lower level ultimately into year end, right? If that's were to happen. So again, there's a lot of scenarios here that I think people are not taking into account because they're glued to a 15-year, sort of seasonality pattern that has worked very well. That's number one. However, and also on the bullish side is Apple. Now, you want to look at something like Apple, and you will notice, again, purely technically, the company does report earnings, by the way, next week on Thursday. But again, very bullish chart. We had a top in December of last year. We kind of came into this top about a month ago, a little bit less. And yesterday, the stock popped 4% and is breaking out, right? So these are bullish things that are taking place. I don't necessarily want to discount that. For those people that are Inner Circle and Market Rover members, we're going to meet you in about 10 minutes, and I'm going to give you a whole bunch of other bullish charts that we're looking at that could work for the next few months or so. The thing I want to really focus on this morning, and I'm hoping, how many people have? Okay, let me do a quick pause. How many people have heard me talk about that? I think gold is getting short-term overbought. Over the past few weeks, I've talked about that. Who has heard me talk about that? Give me a quick yes in the chat box if you have. I'd just love to see if anyone's actually listening to this stuff or if I'm mostly talking to myself. So here's what's happening in gold. So we use an indicator that basically measures extreme short-term overbought and extreme short-term oversold readings. And it's called the Vertical X Pro. So the Vertical X Pro just printed an extreme overbought reading a couple days ago, and the last time it did that was in April. This does not mean that gold is a short. That's not the call. It can well go down, right? It just means that the rate of change is likely exhausted on the upside for the time being, right? So if you take the last time before just a couple days ago, the last time we got an overbought signal in April, gold went sideways for basically like 4 months, right? And then finally started breaking out again. It did, however, also from peak to trough have a drawdown of about 7 or 8%, right? So again, this is not to say that gold's going to fall apart. We're just saying that the rate of change might be done. So I personally, this is just me, not advice. This is just educationally. I sold the remainder of my third of gold, I think 2 weeks ago. But again, we bought gold when it turned into a bullish trend in late 2023 or autumn of 23 and early 24. So we rode that trend. Now, again, I think it's intermediate term overbought. That could be for a few weeks. It could be for a few months or quarters. I don't know. We will measure and map this. That's why we trade. We track momentum, we track trend, and we track extreme overbought and oversold. Those three things I think are critical to be able to navigate the markets because they all intersect. So today, so far, it's early still. Obviously, the U.S. markets have not yet opened. But gold so far today is down 3.5%. It's registering an outside reversal day. So far today, again, the day is absolutely not over. In fact, the day is just starting. Silver, in the off chance anyone cares about silver anymore right now, but here is what's going on with silver. Silver is actually down 5% today. Not quite. It never really popped in meaningful ways yesterday, and it's now off the all-time highs down about right now down about 8, call it 9%. Or so. This is the kind of stuff we want to watch very closely. On a weekly chart, you can see silver too getting a bit overbought. So we remain our bullish posturing on gold and silver, but we do think we're getting very, very overbought here for the time being. So again, this is what's going on here in gold. I want to just make sure I'm very clear. I'm not bearish gold. We're very bullish from a long-term trend perspective, but I have zero gold left. So now we're extremely overbought, right? We're getting an extreme overbought reading. If we were to see momentum also give us a sell signal, which we don't have yet, but if we were to get a momentum sell signal, then I would even go short for a trade, a pure trade. That would be about all I would be willing to do. I want to talk about one more thing about gold, okay? And this is going to be really important for those people that are new to the markets, meaning if you've been around for the markets for 15 years or less, which means you're new because you've only seen one market, right? So, which is up and to the right. So here is one of the bigger concerns I have for gold if we were to have a risk-off phase. And let me quickly add in, let's say, the S&P 500, and I think it's going to illustrate this point quite well. At least that's my hope. So what you're looking at here is two lines. Again, the S&P 500 is in blue, gold is the candlestick chart. My concern is that the pace of buying gold has turned into what now happens all the time, which is essentially a chart-chasing exercise on the part of a lot of retail investors that have only 15 years or lesser experience, or machines, of course, without the algorithms. The problem is the algorithms are faster than the retail traders, so the retail trader ends up getting hurt. If we were to see a pullback in equities, gold is going to go down in kind, maybe even more, because gold will not only be used as a source of funds, but also there'll be margin calls on gold as well. So right now, a lot of people bought gold in part, sort of at least in the back of their mind, as a hedge against equities, which it is absolutely not, by the way. Gold has very different characteristics. But my concern is that now people are both long gold and stocks. I think the last few weeks we saw the largest inflows in gold ETFs ever, which tells you who's coming in. It's not the governments that buy the ETFs, by the way. So it's the more speculative part of the market. So I would personally, if we were to see an equity move down here of 5, 8, 7%, I don't know what it could be, I would imagine gold would probably go down at least that much, if not more. The question, of course, becomes where would we possibly find some support in gold? Well, we can use simple moving average for that just for reference points. But for gold to revisit its 50-period moving average, which is the yellow line on your screen, gold would, if that were to happen, it would probably drop about 10% from here. So that's from already being down 3.7% today, right? So if you don't think gold can go down 10%, then you're probably in an asset class that you don't give enough credit for volatility that it can have, right? Gold can absolutely correct 10%. It's not my call yet. Again, all we have so far in gold is an extreme overbought reading with the Vertical X Pro, right? The last time we got that back in April, it went sideways for 4 months. Again, that's all we're saying. If we were to start to see bearish momentum, which we don't yet have, but I'm going to quickly share this with you. Our trender momentum indicator, you can see, gave us a momentum buy signal back in August, right? Gold then went on an absolute tear up as much as 30%. We are nowhere near bearish momentum on gold right now. All we are is extremely overbought according to the Vertical X Pro, right? So I see some people talk about it, Chris and John. Yeah, what might be something that I would consider here would be a bear call options credit spread, right? That might be something I would consider, but I would not want to be directionally short. If I was long gold still, which I'm not, I sold all the rest of my third, the final third, again, a couple of weeks ago, I think it was, or a week and a half ago, something like that. If I was long, I would probably short futures against it, but I'm no longer. I'm just purely flat now, so I might consider something like a bear call, which I see some of you guys talk about. So are there any more questions on this gold stuff? And do you like this? Does it make sense? Is it helpful, or is it just a bunch of dog crap and you prefer to hear something else? I'd love to get some feedback just so I kind of know, if this is helpful for our listeners here. Let me see what else I have. No, I think that's all I have today. So that's a lot on gold. We talked about the bullish setup in Apple. We talked about the bullish setup in the Dow. We're going to switch on over to the Market Rover Inner Circle members webinar in about 5 minutes. I'll see those of you guys that use the Market Rover over there. And we've got a whole bunch of other bullish charts that I'd like to share with you that are now turning into bullish trends on the Market Rover. So we'll be back here tomorrow on Wednesday. And Again, it would be very helpful if you could all give us a thumbs up like, and please subscribe to the channel. We're actually also toying right now with a subscription level on the YouTube as well, because I know we're putting in a lot of information here, so so that's something we're playing with as well. But again, if you could please give us a thumbs up like, share the love, tell everyone about it, and subscribe to the channel. That would be wonderful, so that we can continue doing this morning shows. If you like this morning show, if you don't want to lose it, because at some point we'll either have to start charging for it or take it down if we don't see the algos pick up soon, please, again, give us a thumbs up, like, and subscribe. And for those of you guys that use the Market Rover, we'll see you in about 5 minutes in our weekly member session with a whole bunch of new bullish trends.